Hi guys, this is Mr. Ibrahim the trader of Gova Trading Academy. So today I'm going to be discussing about internal structure and external structure. So I see that most of you are so focused on the monthly equilibrium line and the weekly equilibrium line, not minding the internal and external structures of other time frames. So as a trader, you need to be able to understand the internal and external structures of other time frames. And here's an example of what I'm trying to say. This is what I'm talking about. So let's say, for example, let's use the blue line and the green line and the red line. So let us assume that the blue line, the blue color rather, let's use just the blue color. Let's assume the blue color is for W1 time frame. Okay, it's for W1 time frame. Also, let's assume that the red line, let's assume that the red line, the red color rather, is for, let's say the red color is for a lower time frame. It can be any it can be any lower time frame. So, but let us use the H2 time frame on this example, okay? So let's say the red line is for H2 time frame. Now, this is what I'm trying to do. The blue line, let us assume that the blue line market structure is what we are having like this. Let's say this is a buy trade structure. Now, on this buy trade structure, I believe you guys can see that we have something here. Hold on. So let's say on this structure, we have a rally based drop around the area. So on this rally based drop, the market structure on the lower time frame is telling us that we can sell. But looking at it using a professional perspective, you guys can clearly see that this area is a demand area on a higher time frame. This area is a demand area on a higher time frame. And what do I mean by a demand area on a higher time frame? This is what I mean. What I mean is, you can see here on the W1 time frame, let's say there's a rally based drop here. You can see this is the rally based drop, right? Now on that rally based drop, I believe you guys can clearly see that this rally based drop is on a major area. You can see if you mark your proximal line and distal line. Now let us assume that this rally based drop zone, you saw it on a H2 time frame. Let us assume you saw it on the H2 time frame. So on the H2 time frame, you are expecting price to come back to your zone and then continue going down. Does it make sense at all? It doesn't make sense. It doesn't make sense to expect markets to go down massively in the area like that, because you are on a higher time frame demand level. Remember, the blue color is for weekly time frame, while the red color is for H2 time frame. So you cannot expect to see a small market internal structure of a rally based drop on the H2 time frame, which is sitting exactly on the W1 time frame demand level. Remember, this area. Why do we call this area demand? You can see whenever price come into this area usually play out and the market usually rally up from the area. Market usually rally up from the area, right? So that is a psychological demand level of the weekly time frame. Now, naturally, we should be expecting market price to play around this area and and go up and start going up, right? And start going up. So on the H2 time frame, you guys might see that there is a rally-based drop. On the H2 time frame, you might see this rally-based drop on the H2 time frame. But as a trader, you should be able to know that that zone is not sitting in the right area. It is not sitting in the right area in the sense that the major trend, the major probability of that area going down below this psychological level is very low, because you can see previously on this higher time frame psychological level, market has been going into this level and market has been going up around the level. Market has been going up around the level, right? So you don't expect just because you saw a rally based drop here on a H2 time frame or any small time frame, and then you expect market price to come there and continue going down massively. No, it is not possible. You understand? It is not possible. So what you should do is to ignore a trade that the zone is not sitting in the right area on the higher time frame, right? The only time you can take a trade around here is if you see a buy formation. That is the only time you can take the advantage of that area, so far as you can see a buy trade formation in the area, which means so far as you can see something like this in the area, and market is coming back into that level on the H2 time frame also, so you can take advantage of the level, because you can see there is a drop-based rally formation here, and this drop-based rally formation is also corresponding with the this drop-based rally formation is also corresponding with what we have, because this drop-based rally formation now is corresponding with the psychological demand level on the weekly time frame. You can see this area is the weekly time frame psychological level. So if we have a buy trade situation on the H2 time frame or any lower time frame around here, it means we should expect price to respect that area, because generally that level is a demand, that level is a very strong demand level on a higher time frame. So we expect price to come back into the level and then continue going up, because this level is a very strong demand level on a higher time frame. So many of you guys usually take opposite trades of the higher time frame formations, So stop doing that. Let's say, for example, let me give you guys another example. Let's say, for example, you guys are seeing that we have a formation like this on the W1 time frame, which is on the weekly time frame or D1 time frame, or whether it's on the monthly time frame. You see that market has been doing something like this. Market has been doing something like this in the past. And then on a lower time frame, like maybe H3, H2, H4, H8, you guys saw a brief drop-based rally zone, around here. And then you expect market price to come back into the zone. Remember, this was the brief drop-based rally zone you saw. Hold on, let's say you saw market was currently playing around here. Okay, market is currently here. Now you can see that on the W1 time frame, this area is a major psychology level. Whenever price come into that area, market usually drop down, right? Whenever markets come into this area, market usually do what? Market usually drop down, because the levels here is psychological level on the weekly time frame. So anytime market price come into this area, market price usually fall down. Market price usually sell off. Okay. So what is that telling you? What is that telling you as a trader? As a trader, that should be telling you that something is going on around there, and you need to respect that. You need to be able to respect that. For example, let's say market let's say market is currently here. So market is currently here. As you can see, on the higher time frame, this area that market is currently on is a supply area. It's a supply area of a rally-based drop, right? It's a supply area of a rally-based drop. As you guys can see, this is a rally-based drop of this higher time frame. So market is currently in that area. So since market is currently in that area, some of you might see a formation on a lower time frame of, you might see a draw-based rally. Maybe on H2, you might see a draw-based rally formation. Now, this draw-based, you can see the draw-based rally formation that we are having here, right? Now, this draw-based rally formation that you see, some of you are expecting market price. After marking the proximal line and distal line in the area, some of you are expecting that market should come there and rally up, not knowing that the psychological level on this area says that whatever markets play out in this type of area, market usually do what? Market usually go down. So guys, you guys need to know what to do whenever you are in the market, okay? So stop buying and selling in areas where we have psychological levels in the market, all right? Stop buying and selling in areas where there's a higher time frame psychological level. For example, some of you might see a draw-based rally around here. Some of you might see a draw-based rally around here, and you are still expecting markets to buy. You are still expecting market to buy up around here. That is not making sense, because you should be able to tell that this area, you can see this level here. This level here is a psychological level for selling, because whenever markets come back into this level, this psychological level, you see how market price is dropping down around the area. So don't expect your buy trade to work out in this type of situation. You understand? Because the higher time frame is telling us that the higher time frame situation is telling us that market is going to sell off. So if you are having an opposite trade on the higher time frame, your zone is not sitting in the right area on the higher time frame, then you shouldn't be taking that trade. You shouldn't be taking that trade. For example, you have a buy trade around this level. Imagine having a buy trade around this level. Does it make sense to be buying around here? No, it doesn't make sense to be buying around here, because you can clearly see that previously this level is a psychological level for selling, for sellers, right? For sellers, okay? And also, the only time you can take a trade around here is if you see a selling opportunity. If you see a selling opportunity, you can see this is a rally-based drop situation. Now, if market happens to come back into this area, you have all the right to sell down around here. You have the right to sell around there. You understand? You have the right to sell around there, because the location is very good for that formation. Let's say, for example, you can see that generally, this level has been standing as a sell area on the higher time frame, right? Why is this standing as a selling area on a higher time frame? That's because we can see how market has been respecting this structure on a higher time frame. Can you see? You see? So whenever market goes down and market came back to that area again, we should expect market price to go down again to respect the psychological level that we are having around here. We are expecting market price to respect the psychological level that we are having around this area. You understand? So that is how to trade. That is how to trade a location. So you can see, if there's a if this is the situation we have, if this is the market structure on a lower time frame, and in this type of structure on a lower time frame, we are expecting market price to respect this type of structure of a draw-based rally situation, then why shouldn't we expect a structure like this on a higher time frame should be respected, like on the weekly time frame. Shouldn't we expect that this rally based drop shouldn't be expected on a weekly time frame? It must be respected. You understand? So whenever you see that you are buying in this type of situation and market price is currently here, it means you are not taking the right trade. The only trade you should be taking around here is to be selling, because you can clearly see that the structure on the weekly time frame or the D1 time frame is a rally based drop. So market is currently around here, and you have a buy trade formation. You have a buy trade formation. So this buy trade formation that you have, you are expecting market price to come back into the zone here and then rally up, not knowing that the formation here is going to make the market go down massively. So always identify the psychological level of the higher time frame and see if your zone is sitting in the area or not. For example, if I have a sell trade around this level, then I'm good to go. I'm good to go. I'm good to go, right? I'm good to go. But if I have a buy trade around this level, I should be worried. I should be worried, right? I should be worried because buying around here hasn't been playing out at all, hasn't been playing out, right? So I should be worried. I should be worried. So that is my point here, okay? That is my whole point here, all right? So that is what it means by a location on a higher time frame. So remember, the first type of location I taught you guys, the first type of identifying location that I taught you guys is on the module 8. On the module 8, I taught you guys how to identify location looking at the previous period separator, the last formation on the previous period separator. For example, you can see this is the last formation that formed here towards the ending of last week, for example. So you can see this is a drop-based rally that formed. So this is how to identify the location of the formation. But how to identify the formation, whether if the trade is sitting in the right area or not, is what I'm trying to show you on a higher time frame. So the first thing I taught you guys is on module 8 is to be able to identify the formation, right? Is to be able to identify the formation. Now, module 10 is all about, after identifying the formation using module 8, then module 10 is going to tell you whether the zone is sitting in the right area or not, right? So let's say, for example, we have this drop-based rally formation now. This drop-based rally formation, let me switch to a higher time frame, like weekly time frame. Now, you can see on the weekly time frame, the zone is currently sitting around here. So the zone is currently sitting around here. You can see this is a major supply level. This is a major supply level. And we are having a buy trade on a lower time frame, right? We are having a buy trade on a lower time frame. So it doesn't make sense to be buying around this psychological level. It doesn't make sense to be buying around here, because I can clearly see that the psychological level is for sellers, right? You can see sellers are the ones playing out in this area. So if markets came here, we should expect markets to continue going down, right? If markets come back into the psychological level again, we should expect it to go down again. If markets come back into the psychological level, we should expect it to go down again. If markets come back into the psychological level, we should expect it to go down again. So any buy trade you are seeing around this type of area, any buy trade that you are seeing on this level that I'm painting here, should be ignored, right? Should be ignored. If whether you have a buy alignment or not, you should ignore it, because it is not sitting in the right area. It is not sitting in the right area. You understand? So you guys need to know how to identify if your zone is sitting in the right area or not. So that is it on the module 10. All right, that is the main points I'm trying to make here on module 10, by identifying if your zone is sitting in the right location on a higher time frame structure or not. All right, so let us assume that this is the weekly time frame. Let us assume that this is the W1 time frame. So if this is the W1 time frame, just because you see a rally based drop around here, does it mean you should be selling? Just because you can see a rally based drop around here, does it mean you should be selling? You can see this is the rally based drop I can see. So look at it. There's a rally based drop here. There's a brief rally based drop zone here. So now on this rally based drop zone, does it make sense for me to be selling around here? Does it make sense? No, it doesn't make sense because I can clearly see that this is a psychological level for buyers. This is a psychological level for buyers. So if market price happens to come back to my zone, to my proximal line and distal line, I shouldn't expect market price to sell. I should expect market price to start going up because this area is a psychological level for buyers. It's a psychological level for buyers. You understand? So that is what I mean. So you guys need to be able to understand what psychological level means on a higher time frame in corresponding of the zone that you have on a lower time frame. You understand? So that is what you guys need to be looking for. So that is it, guys. That is it. Now let me show you more examples. You can see the first thing here is to mark the monthly equilibrium line, which is here. And this, of course, is a blue line. The next thing is to mark the weekly equilibrium line, which is here. And it is a green line, which means we are in a sell trade alignment. So now on this sell trade alignment, remember, we are trying to look for a formation just around this area, just just few hours before market closed last week. So let us switch lower. So you can see there's a formation here because above the noise, remember we went above the noise, isn't it? So remember, this is the area. Remember, this is all noise here. The formations in this area are not good. So we went above it, and the one above it is this structure that I saw on the lower time frame. So now after seeing that area on the lower time frame, I believe you guys can see that zone. You can see this is the zone, right? You can see that this zone did not work. Market hit stop loss on this zone. Why did market hit stop loss on this zone, even though we are having a sell trade alignment, and even though this is a downtrend on the lower time frame? That is because on a higher time frame, this area is on a demand level. This area is sitting on a demand level. Can you see that? The area is sitting on a demand level. Because remember, the structure on the higher time frame is market has been giving us the structure like this on a higher time frame, and the market came back into that area, and then we have a structure, we have a zone here. Are you expecting market to then do this and then do this? It doesn't make sense, right? So we expect market price to continue respecting the bigger structure, which is going up massively, giving us a bigger picture, right? And that is exactly what happened. There's a market structure on a higher time frame that has been playing out like this, like this, like this, like this. The next structure should be something like this, and then the next structure should be something like this, right? That is how to look at market structure. So the buy trade, the sell trade formation we are seeing around here is not corresponding with what we have, right? So on a higher time frame, the zone is not sitting properly in the right location. You understand? You can see that this area is a psychological level for buyers. You can see this area is a psychological level for buyers. You can see the market structure here. This is a psychological level for buyers, right? So we expect something like this also, isn't it? And then we went to see a small structure in between a major structure. Remember, the major structure we are having is these ones I highlighted here. You can see these are major structures. These are major structures. So we saw a small cell structure on a lower time frame here. So does it make sense to be buying to be selling around this level rather? Does it make sense to be selling around here? It doesn't make sense, right? So that is what it means by looking at your trade on a good structure, if your trade is sitting on a good structure or not. All right, if your trade is sitting on a good structure or not. So now, if I'm to compare if my trade is sitting on a good structure or not, let's say, for example, there's a sell alignment. Now, this sell alignment, let's say the blue line is somewhere here. Let's say the blue line is somewhere here, and then the green line is here, and then the green line is here, for example. Now, if the green line is there, and let's assume that this area is not there, this zone is not there. So let's say our blue line, our green line is currently here, and then our blue line is above here. So you can see this is a sell trade alignment, right? Now let's assume that on a lower time frame, we saw a rally-based drop zone on a lower time frame. And this rally-based drop zone on the weekly time frame and the D1 time frame, the zone is sitting in a supply level. Why is this a supply level? It is a supply level because we can clearly see the structures that we are having around here. So market went down. We should expect markets to come back into that structure again and do this, right? That is what we should expect. So if there's a zone here, for example, on a lower time frame, and we happen to switch to the weekly time frame, let me mark the zone and then switch to the weekly time frame and see where this area is going to be sitting on. So you can see that this zone is in a good area because it is far away from the demand level. It is far from the demand level. So now this area is no longer the demand level. It is a supply area because market is playing like this. So we are expecting market to come back and continue playing the same way. You can see the buy structure is playing out. The sell structure is also playing out. So we need to know what we are doing in the market in all these type of areas, because I believe you guys know that even the D1 time frame also has a drop-based rally situations, right? So you can see this is a drop-based rally. Markets came back to the area. When markets came back to the area, do you expect market to be selling just because you saw a rally-based drop zone around here, for example? You can see the rally-based drop zone that we have here. Look at it. Let's say you have a rally-based drop zone around here. You can see this is a rally in price. This is the drop in price. You are expecting market price to come back here and respect this area and then go down, isn't it? That is what you are expecting. No, you are making a big mistake. The big mistake you are making is you are forgetting that there's a drop-based rally around here that is going to push the market up massively because the higher time frame structure demand drop-based rally is also going to play out in a very strong way. You understand? So the only time you can be buying around that level, around this level here, is when you also have a buy trade around the level. Is when you have a buy trade around the level. The only time you can be selling around here is only if you have a sell trade formation around the area. Okay, you shouldn't be buying around this level. You shouldn't be buying around that level. You should only be selling in such level. Okay, so you can see if you have a buy trade around this level here, you can see the trade will not work because This is a psychological level for sellers, right? And this is a psychological level for buyers, right? Whenever markets come into this buy area, market usually play out in the area. So don't expect market to be selling around here. You should expect market to be buying. That is what it means by a higher time frame location and understanding its structure. Okay. So let's move on to another example, AUD USD. So by now, I believe you guys understand the reason why the trade here did not work. For this XAU GBP, the trade here, you see the reason why it did not work, because this trade here on this level is sitting exactly on a higher time frame demand area. Okay, it is sitting on a higher time frame demand area, and this is what I mean. Remember, we saw a zone on the H1 time frame, which is exactly this area. If I decide to switch to a higher time frame like the D1 time frame and the weekly time frame, you should be able to see that that level is sitting exactly on a higher time frame demand area. So that is why the trade there did not work, right? The trade there did not work because why did market price rally up massively here? Market price rally up massively here because there's a buy structure around here, right? There's a buy structure around here which is pushing the markets to rally up. Okay, so that is it. Now let's move on to AUD USD. On AUD USD, we have our monthly equilibrium line here, and then we have our weekly equilibrium line here, which is a green line. And then we were expecting market price to come back into this level and respect it, isn't it? I believe that is what you guys were expecting. Market price to come back into this level because that is the formation that formed last. That is the last formation that formed towards the ending of the week of last week, right? But let us see where this zone is sitting on a higher time frame. Let us see where that zone is sitting on a higher time frame. So let's check on the D1. Let's check on the weekly. So you can see this trade on the weekly, it is sitting on the supply side. You can see that zone is sitting on the supply side. So you can see how you are expecting this trade to be buying when on a higher time frame supply area, the structure we have around there is a structure like this, right? And this area is a psychological level for sellers. This level is a psychological level for sellers. So you can see the reason why market did not buy around here. Market did not buy around here because that is a psychological level. Whenever market came back into this area, whenever market came back into this level, market usually sell off. You can see market usually sell off. So you don't expect markets to be buying just because you have a buy zone around here. The only time markets can be buying is if your buy zone is close to this area. Then markets can be buying because we have a psychological level for buyers around here, right? We have a psychological level for buyers around here. So you expect market price to come back here and buy, right? You expect market price to come back here and buy. So you need to know where your zone is sitting on. So if you have, let's say, for example, our proximal line and distal line is here. Let's assume we have a buy trade around here, around this level. We have a buy trade around this level on the lower time frame. I'm talking about a lower time frame. So you can see it is good to be buying around this area, right? It is good because the psychological level is a buy situation around here. It's a buy situation around here. So we are expecting market price to come back here and at least go up a little bit here. And when market price go up into this area, we are expecting also this psychological level to change so that we take our profits here because market price has been playing out like this here. right? So you guys need to understand how to analyze psychological levels on a higher time frame, right? On a higher time frame, so that you are not buying and selling against the psychological level. And that is why this buy trade this week did not play out, okay? That is why the trade there did not play out on this zone. Remember, this was the zone, right? Now let's move on to GBP USD. So on GBP USD, this is the area. Monthly equilibrium line is here. Monthly equilibrium line is here. So it is a blue line, of course. We all know that. Then the next one is the green line, which is here. Which is here. So, and then we are expecting market price to buy. Remember, what we are expecting market price to do is to buy around anywhere around these two levels, anywhere around these two levels that we are having, right? Is to buy anywhere around these two levels. So now, on these two levels, let's see. Let me first of all use one level as an example. Let us see where this level is sitting on, this zone. Let's see where it is sitting on a higher time frame structure. So let's switch to the D1 time frame. So on the D1 time frame, you can see that this level, the zone is sitting on the higher time frame supply side, supply area. You can see market price is sitting exactly on the higher time frame supply level. That's why this trade did not work. Assuming the trade was around this psychological level, then we expect it to buy, right? We expect it to buy. But market price is not sitting in the right area. It is not sitting in the right area. So let us assume that market price went all the way up here. We are expecting to be selling because the psychological level says we should be selling, right? That is what you should be looking at whenever you have your zone. Don't just be taking your zones blindly, okay? Let's switch to AUD NZD. On AUD NZD, this is what we have. This is the monthly equilibrium line, which is a blue line. And this is the weekly equilibrium line here. So clearly, this is a sell alignment, clearly. So now on this sell alignment, the zone I'm seeing, the last formation I'm seeing is this formation, because it is a very good formation, of course. It is a very good formation, okay? But you can see the formation did not work, right? The zone did not work. Now, why did this zone not work? This zone here, why did it not work? This zone did not work because on a higher time frame, that is, the zone is sitting on a demand area. It is sitting on a demand area. So now let us switch to the higher time frame to see where the zone is sitting on. So you can see the zone is currently here. This is the buy zone. The buy zone is currently sitting on a higher time frame buy structure. You can see generally market price was supposed to be going up. So, and then we were expecting market to be selling here. Does this make sense? No, we shouldn't expect market to be selling around that level, right? We shouldn't expect market to be selling around this area. We can only expect market to sell around here is if market is in a psychological level like this. The psychological level here is market is playing around here. So if market happens to come back here again, psychological level is going to be respected, right? It's going to be respected. And then we expect market price to come back down. That is what you should be expecting the market to do. You understand? So try to always identify areas where your zone is sitting on. That is the main point of module 10. All right. I'm not done yet. I'm going to send the rest of the video today. Okay.